A lot of times, I think we try to rush the process on trading and just in general with life stuff too. And so having like a mental mindset of like you already kind of have what you're trying to get, it stops me from trying to rush it because you already have it, right? So anyway, it's just some stuff I'm thinking about. Just additions and stuff that I can go on because I know I talk a lot about technicals, right? But that next hump, and honestly, probably the most important piece of trading is mindset, and understanding your mental, right? And then you give it time. Um, and I know it's like the cliche thing that everybody says, but I mean, it's really true, right? I mean, because at the end of the day, like these candles are either going to go up or they're going to go down, right? You can look at this right here that I always talk about. You could see this as a run of liquidity, breaking structure, fair value, all that stuff like that. You could see it as a double top, right? You can see it as there's a bunch of different ways to read the market, but the most important thing is you being able to kind of see a situation, recognize it for what you believe it is, and have conviction in the trade that you're taking. Um, and so that's one of the things that is just, you know, more that's more mental than anything else, right? If you ever get caught in a situation where you're whiplashing back and forth and you're like in a buy position, then it goes the other way, then you're like, oh, now I need to sell, and it goes back to the buy, like, oh, I was right, I should have did this, right? Like a lot of that is just having conviction in the trade. And you need to have conviction regardless of the outcome, right? And I think one other thing that I'll do, and I'll talk about this, is that like rightly or wrongly, I think of myself as the best trader in the world, right? I might not have all of the evidence. I might not have made the billions of dollars, right? That everybody else has made. Like when you think about those big hedge fund guys, but I step in there knowing that, having the confidence and knowing that, uh, I believe that I'm one of the best traders in the world. So with that in mind, like how would you got to think about how would if you were the best trader in the world or if you were the six-figure trader or the seven-figure trader or the guy that's making 30, 40, whatever your number is that you're trying to hit, how would that person act if they were in this scenario? Or like if you were up, I don't know, $10 million in your trading career, how would you act? Would you trip over, price moving the opposite, let's say you miss your entry. Would you try and chase that entry? If you had $10 million, you probably wouldn't. You'd probably be like, okay, cool, I'm good. Let me wait for the next best setup. Or if you had $10 million in the bank from trading and you knew you could do what you say you could do, would you try to, squeeze every, over leverage and try to get every little, last dollar out of a run, right? Or would you say, okay, no, I know there's going to be another setup because I've made millions of dollars doing this. So a lot of this is like having the mindset of that you've already kind of done what you are trying to do. And it kind of stops you from doing the dumb things or the things that could potentially come back and bite you. Um, because you wouldn't need to do them if you already were there. Um, so yeah, this is kind of I know it might not make a lot of sense, but um, it's just kind of a basic mindset thing that I'm going to talk a little bit more on when I start putting these risk or these psychological videos together too. I think that's kind of like the missing piece. If you feel like you're in a rut, 9 times out of 10, it's probably more mental than anything. But anyway, okay. So what I want to do, so obviously I talked about this in the chat, but basically what I want to do for the rest of the year, I'm no longer doing the Trading Nut podcast. We had a conversation with Cam. He's trying to take the podcast in a different direction and do some stuff. There's some more stuff I'm going to be working with him on in the future, I think in the next few weeks. But as far as the actual weekend calls, I'm done with those. It's been a cool ride. So what I'm going to do is have a lot more content that's just going to go up on YouTube. Um, and starting with these videos. So these videos will all be uploaded to YouTube for the rest of the year, and then probably after that, I'll probably start throwing things back on my WAP and like these videos. But I just want to make sure that I get these to you guys quickly, right? Because that's been my biggest thing is like these review videos when we record on sometimes there's a delay, sometimes they don't get uploaded. So quickest way for me to do that is get that up on YouTube. So that's what I'm gonna do for now. And maybe I'll hide the video, but at least you guys will be able to see it, or hide it to the public, I guess. Um, so okay, so first things first, let's talk a little bit about dollar. So where are we at with dollar? Uh, and then we'll go through the rest of the analysis, and then we'll do like our basic weekend Sunday call where we talk about the trades. So dollar is in this weird situation where last week, well, not even last week, though, 2 weeks ago, we took out the high. of this buy side liquidity here. Again, I'm not too like dollars in this weird range where technically we are getting higher highs and we're running higher. We did run buy side here, so we could keep running. This could be the transition point where we grab the buy side and keep going down with the downtrend. We're in a spot where I don't really know, right? Because again, this can just as easily go up as it could just break structure, right? You have all the requirements for, a liquidity sweep and are kind of our setup in reverse on the bigger time frames. So we're in an overall downtrend. So buys are kind of risky here, right? Long-term buys are still kind of risky. We did sweep our buy side liquidity, right? Think about like our New York session continuations, right? And we come on and we saw the market's already fallen, and now we want to see if we can grab an area buy side and then keep going down. Well, what do? We consolidated, we ran up here. So this could be the start of us going back down again, right? We would just want to see like a break in market structure, hit all that other stuff. Or it could keep running up, right? It could respect this level here. This is an inverted fair value gap here. It's inverted because it held initially, right? But then it broke through. So almost acting like support and resistance, right? It's respecting that on the dot. If you zoom in, it's respecting consequent encroachment, right? So basically what I'm saying here is in this situation, I have no idea what's going to happen. And that's okay. But you need to know what you don't know, right? And that's the first and foremost thing. You need to know if your scenario is a good scenario or not. And if it's not, then you don't need to be trading it, right? So with this being said, I'm not it's since I use this as kind of like my like barometer or like my like, you know, this chart is to get an understanding of what's going on in the other charts on currencies. If I don't have a clear idea of what I think this is going to do long term, that means one of two things. It either means I'm not trading currencies, or it means that the if I do trade currencies, then the risk has got to be lowered. It's got to be a lot lower risk, and it's got to be a lot safer setup. It's got to be very clear when I trade that. So we'll talk about euro in a second. But as of right now, I mean, I could see one of two things happening. I could see us respecting this fair value gap and then keep running higher, which means that euro would run lower. Or I can see this, again, we ran this major level of buy side daily liquidity. I can see this breaking, forming a fair value gap and going lower. Again, if you don't have an idea of the overall directional bias or what liquidity we're trying to run to, we're trying to run towards more buy side up here, or we're trying to run back towards sell side, um, then you don't need to be trading. You don't need to be trading the chart, and you don't need to be you definitely don't need to be putting a lot of risk on the charts, right? Um, so yeah, so this is kind of where we're at. I don't know what we're gonna do, to be honest. And so I need more information. Do we start to respect this? If we start running higher, then maybe I'll say, okay, let's target this buy side level here. And if we get a strong move, maybe this one up here, right? Same thing if we're going lower, right? If we're going lower, then I gotta look and see what's going on here. Here, maybe we're targeting the sell side that's back down here, or wherever, right? So you just gotta have a basic understanding of what you think the market's doing and where you think it's not even what it's doing, but where is it heading? And if you can't answer that question, if you can't answer what money we're running to, scratch it. So that's kind of what I'm looking at. I need more information. So hopefully this week we'll get a better clue into what's going on. Let's look at euro. So euro's kind of the same thing, right? So technically we broke structure, right? You can see that on the week. This is the daily time frame. Let me go up to the weekly. Uh, Technically we broke structure, right? We ran this major level here, took out buy side right there a few weeks ago, back in September. Oh, actually 2 months ago, back in September, ran that buy side again over every old high is money, right? So we came up there, ran that. That's kicked off that major run that basically got funded on, right? Because having this huge wick here let us know that we probably weren't going to go back up there. So this could be a continuation of this trade right here, or that not trade, but that continuation of that bearish momentum. Why? Because we broke market structure. We do have a fair value. Do we have a fair value gap? No, we don't have a fair value gap. We did trade back into this order block here, right? So that could be the market saying it wants to respect this order block, right? It's the first one after a major market structure break. It could respect that, keep going lower, or it just as easily could run up and take these highs, right? It could still run up there and grab that buy side over this previous week's high. So as of right now, still not looking good for a definitive direction, right? We want to trade stuff with definitive directions. So we see the market trade back up into this. This is that order block, right? That monthly order block, or I'm sorry, weekly order block here. Um, we see the market trading back into that, respecting it, closing out the Friday here, right? Last week was a pretty strong counter trend week where we had a Monday that was bearish, right? Then I mean, this is a classic week, right? This is exactly what I talk about all the time. So that Monday that's bearish, right? What is a bearish Monday doing? Well, it's opening up the week by consolidating, then manipulating, right? It forms the low for the week. The low of Monday is the low of the week. And then what happens? Closes back up in the range here. And then it spends Tuesday, Wednesday, Thursday, forming the high of the week. And it trades back into Friday, gives us, a trade back into the range and closes, Friday there, right? So actually, Friday closes down here. So again, counter trend Friday, counter trend Monday, Tuesday, Wednesday, Thursday, rise. That is a perfect scenario week, right? Again, just like we're doing you know, each day has its own kind of like power of three. This is the weekly power of three, right? This is the weekly liquidity right here. Actually thought we could have went a little bit lower and took that low right there. We didn't go that low, but trading back into that low of the week and then riding up to the high of the week. And what do we take? Well, we took liquidity over this wick right there, right? That buy side that was sitting right there ran over that high of this liquidity right there. Obviously, the ideal one would have been right there just to get a better read, but we took that low and then, retracted off that range. So going back to dollar really quickly, notice that dollar didn't do that same thing. So if I get rid of this for a second, just gonna go daily. Notice how dollar stopped just shy of taking out that liquidity. Like it's almost saying like I didn't need to go down there and take it, but euro did, right? That could be a sign that the market is gonna reverse back up, and it could be a sign that the market on euro is gonna go back down. It's called SMT divergence. Whenever you see a market, two correlated markets, or whether they're positively correlated, like they both go in the same direction, or negatively correlated, like one goes up, one goes down. Um, then if you see stuff like that, it could be a sign that this market has all the liquidity it needs before it goes back up. So these are little clues that I look at. It doesn't really give me anything definitive until I actually until the market starts pumping and moving, right, this week, right? So there's not really a sign or a signal there, right? It's just how am I looking at things? Um, so what am I looking for this week? Again, just because we had a rejection from a level where there's buy side doesn't necessarily mean that the market's ready to reverse. We need to see some breaks of structure. Right. These wicks are telling though. If I jump down to that 4 hour time frame, these strong wicks and strong rejections could mean that the market is ready to go back down. Right. And this does line up with the overall idea that we had, right? We do want to see the market go back down. We originally, I mean, 2 weeks ago, I wanted us to take this low here. Like that was the low that I called out a couple weeks ago. If I go to euro, you'll see it right there, that buy side. Or I'm sorry, that sell side right here. That's what I thought we were gonna immediately hit 2 weeks ago, and I ended up getting stopped out on one trade because we just had this long run going into that Thursday and Friday. But yeah, so I mean, for me, again, I do definitely want this to continue to go lower, right? We're in a downtrend. We haven't really broken structure back to the upside on the daily. We broke structure to the downside on the weekly, and the daily. We're going down. So ideally, I do want this to continue to go lower. I don't have a ton of confidence because of dollar. And if you kind of step back and look at this, I mean, it does kind of look like we're just kind of consolidating and bouncing around from this low to this high. So I'm looking at this level here still because I want that to get hit. I'm also looking at this buy side level right here, right? So with these very strong rejections that we're getting from the 4 hour time frame, I wouldn't be surprised if we start running lower, but I need to get some. And this is kind of what I said last week. I need to have some type of like strong bearish conviction that the market's going to go lower. And I think last week I called this out and I said I wanted to see this fair value gap here get violated. I'm going to pull up the euro one because I think I did it on that chart. Okay, well, I guess I didn't. But ideally, again, right, I need to see this 4 hour candle or that 4 hour fair value gap get inverted. So I'm going to make a note here that says, I want to see inversion. I do like the fact that we were dancing above that high, right? Again, going back to the daily, we were, oh, I guess I got rid of it. So we've been dancing above this high. This is a good sign, right? Especially if this was our overall draw on liquidity. If you look just slightly to the left, there's also a SIBI right there too. So there's a couple things here in this area that the market potentially could want to respect. See how that SIBI lines up perfectly. Consequent encroachment lines up with that wick. Wicks above once, twice, respects it, comes through here. And I wonder if sometimes what I like to do is I like to go to higher time frames and see how the market reacts to levels. See if there's any more like correlation. I don't see anything there. This looks very dropped down to an hour time frame. Came up here once, broke structure, ran up again, came back down, broke structure again. This looks very strong for a bearish idea. Again, still not perfect because the dollar is not lining up yet, and it's not really as much conviction. But notice how much time I'm spending like going through and like analyzing this. Right? We've been on this chart for like 5, 10 minutes. Um, let's see the comment section. Yeah, cool. So again, I'm trying to get as much as possible, right? Because let's be honest, or much info as possible. Because if we invert this, like I think we could potentially do, and that gives us a very clean breaking structure. When it takes out that low, it inverts that gap, right? We're looking at a shot, a straight shot back down here, right? That's over 100 pips, right? It's 598 or 590 to 489. So it's 110 points. You put 10 contracts on that's $10,000. Or you put 5 contracts on that's 5,000. You put one contract on that's $1,000, right? So that one trade right here it could be the only trade you need for the month, right? You know, there's no need to try and rush this. Um, and try to take every single little trade. That's why I'm so detailed with this higher time frame stuff because once I get a good, and you guys have seen this, right? Like once you get a good understanding of what's going on in the daily time frame, right? Like remember this wick up here that caused us to really get a bearish bias. I got funded off of that. That was 200K funded off of just this alone. So once you get a good directional bias based on these like higher time frames, you can really eat off that for weeks, right? This could be one big trade. If it plays out like this, again, I don't know if it's going to, right? I don't want to overthink it or over project. But this right here from this inversion or this breaker structure that could happen here, that could be one trade, or that could be 2 or 3 days of trade setups, right? It's 100 points or 100 pips. So it could take a second to get down here, right? So yeah, so it's just one of those things where we gotta just be very careful and make sure that we are looking for the right stuff. So that's Euro. GBP is a mess. This is not fun. I mean, there's wicks down here. We're breaking structure. We inverted this. We technically didn't run up in this gap yet. So if I'm going to stick with this bearish idea, maybe something like this to go lower, right? So something like that, maybe. I'm not sure yet. Again, this one's tricky. I see a lot of support, a lot of wicks off of these levels here. It means we were running for some type of liquidity. Maybe we were trying to take out that low and we just did it and then ran down one more time and then came back up. But this area right here, it looks, some people say this is area of support. I'm saying it seems like a lot of liquidity being ran in this area. So maybe we'll run up here, maybe we'll run up there and then go lower. But again, we're still kind of bearish. And so right now, euro is the cleanest thing to me. Go to the weekly time frame on this on GBP. Again, I'm looking at the futures version, so just keeping that in mind. But this looks like, what is this? This looks like our setup, just on a higher time frame. We came up here, ran liquidity once more. Notice there was a very small fair value gap. Well, very small weekly fair value gap. It's probably a big fair value gap if you go to the small time frames. Notice how we stayed uh, below that, uh, just like there. The wicks are going through it, but the bodies are respecting it. That's algorithmic, right? That's algorithmic. So the market's running lower, break structure by taking out that low, trades into this gap. This pullback that we got over the past 2 weeks is just us recharging to go lower, right? That's what it looks like, right? Took out the sell side after this, again, trading into that. And again, the big picture, we've had, 2 big weeks of bullish pullbacks, but I mean, overall, we're still bearish, right? So this is just again a bigger version of what we see that happens and plays out, a few times a week on the 5 minute, 10 minute time frame. You just got to be patient, right? But once you're aligned and once the market starts running lower, even from this where we're at right here to this low, that's 70, it's 170 pips. So you put one standard contract on that, that's $1,700. Or 10 standard contracts on that, $17,000, right? Obviously, it gets bigger from there. Five would be like eight and a half. So that one trade, right? It might take a couple days or a couple weeks to get there, but that one trade could be enough to last you the month, right? So it's just having a really good understanding of what's going on up here before you can go take things lower. So that's first and foremost. Then I'm gonna look at gold. I think I'm gonna keep this really quick. Gold is broken structure. It's 4 hour break. Even though we're trading back into this. So this is another scenario where I'm seeing some bearish sentiment on lower time frames. I'm seeing some bullish sentiment on the higher time frames. We traded back up into this right here. Traded back into this fair value gap. I'll say if we invert this fair value gap, then this is a very clean short idea. Very clean short up idea. I'm getting sleepy, man. Sorry. So we got, but if we want to go bearish, we got to see this invert. So I'm gonna put this right here. Say I want to invert for shorting. Now, same thing here. If this respects this fair value gap, maybe if it like Monday comes back down, trades here, and then closes above it, I'm gonna be more likely to want to see this continue to go higher. So really going to be watching that to see how it works, that daily fair value gap. Um, Let me look at a couple of things. That's gold. USDJPY. This is set to go higher. Looks very clean to go higher. We traded into this order block. We take out that high already. Already took out that high. If you look left, we got some trend line liquidity right there. See how these lows are getting parallel. We also have this fair value gap up here. So this is USDJPY. So the yen would not be surprised if we took this level right here. So there's that. So what else am I looking at? The USD just Euro GP. Let me go ahead and look at the indices now. Now, this is honestly where I'm going to be focusing for the next few weeks. I do like Euro. I like what I'm seeing on Euro. But again, just it's got to play out, got to be patient. So that's what I'll be looking for. But when we look at Nasdaq, where's Nasdaq? Okay. Again, my whole thing with Nasdaq is I'm not because I think I'm pretty sure everything went into effect or they got signed. The papers got signed for the government shutdown. It's just hard to. I think everything is in effect. I don't know if it's. Well, I know everything is signed. I don't know if everything went into effect. My bad. Um, I'm not sure on that. Maybe if one of y'all know. Uh, but I saw a bunch of articles about the government shutdown ending. I don't know if it's officially ended, but if it hasn't, again, it's been hard on Nasdaq to really get a weekly directional bias because there's no liquidity. Because I mean, there's liquidity, but there's no like uh kind of like things to really frame your week out. And you guys know that like I look at the calendar and I'm like, okay, cool. PPI, CPI these days. So probably those days will be the days that we get a lot of volatility beforehand or whatever. And so it's been really hard to kind of pull those things out on currencies. And when coming to NASDAQ, again, Trump speaking and talking has really kind of thrown off a lot of things. Anytime he talks and he has a tendency to ramble, right? And like he will talk about, just random stuff. And sometimes it's hard to read, or sometimes he'll say too much, or he'll say stuff to it almost feels like he's manipulating the market on purpose sometimes. Um, but it's hard to get a read on those things. So kind of navigating the no news releases that we would get at 8:30 and 10 o'clock with the no NFPs, it's been hard to navigate, time wise to get in a good flow. But what I have been doing recently, and I'll talk about this when I break down the trades, is really more focusing on what's happening for the day, right? So I'll look at the 4 hour bias and I'll see where we at. In this case, we're very bearish. And again, I'll break down the trades later after I get done with this. But again, looking at this huge daily candle here, I wanted to see the market go bearish last week and was looking at sell side there. We did take it. I did take one trade on YM because YM had a ton of good setups. And really, since I don't have a really good read on the overall bias, we could just as easily go lower as we are going higher. What I'm really mostly paying attention to is how we're treating Power 3 for the day. Um, are there things, can you look at Power 3 and say, okay, cool, based on this maybe daily time frame or the 4 hour time frame, since we want to be a little bit sharper with what's going on, is there an area draw liquidity that I can look at and frame out on, the 4 hour when I get to the terminal, and how can we use Power 3 to play into that, right? And so I guess I'll do the trades now because I'm already talking about it. Well, no, because I took them on YM. But generally, if the market's bearish, the daily time frame's bearish, like we closed last week bearish. Um, well, not this week, but coming into this past week, if we close the market and we're bearish, then I want to see, more bearishness, right? So I'm looking for the market to come up, take it the Asian highs, and then run lower. So that's kind of what I've been looking for. In this particular week, there's a couple of things that I want to note on NASDAQ. We took sell side here. So that was kind of our main target. I'm gonna write sell side. Took sell side liquidity there, traded back up into the range. I think we respect the consequent encroachment of this wick. So these are things that I'm all looking at. Again, it seems like it's a lot of things, a lot of checklists, but over time you start to notice I'm looking for the same things over and over again. Do we take highs? Do we take lows? Are we respecting wicks? Are we respecting fair value gaps? Where are we headed? Like where are we going towards and what can we frame out as a new target? Right. So it's the same thing over and over and over again. Um, so we did respect consequent encroachment of this wick, even and take sell side. I wouldn't be surprised if we traded back up into this range. There's a fair value gap right there. Wouldn't be surprised if we open up here and run into this. Uh, I could see us doing this. I don't really want to buy anything though, because again, we're still very much in a downtrend over the past few weeks. So I can't really say that we're going to buy anything. If we're going to buy something, I need to see daily 4 hour breaks in market structure that let's say for us to go higher. So even here, you can see that this is the low. I'm gonna get rid of this. This is the low. Came down here, swept that low, traded all the way back up in here, respecting even that low. Like we respected the entirety. And really the initial low was set right here. You can see I draw a line from this low here all the way to there. You can see the market is having a crazy hard time breaking through that. Um, we did technically break structure there, but we traded back into this overall fair value gap. So what I'm going to be looking for is again how we react in this zone if we get here. Do we invert this, right? Do we invert this and run higher, run right through it? Or do we respect it and keep going lower? So that's gonna what I'm gonna be watching. So maybe if there's an opportunity to catch a very, very clean power of three where we come out of Asia, you know, run lows, maybe take out Friday's low, trade back into this gap, and then do something like that. And from there, once we get there, we could either run right through this and invert this, or um we could take that and run low. So again, if it's a very, very clean bullish setup, I might take it, right? Again, that 25,165 level. But um I don't really know yet, just as yet. And again, I need more information. So I'm not gonna probably try and take anything until I figure that or we get that figured out. As you guys can see, like as we get closer to the end of the year, I'm not really trying to like push the button crazy, right? I'm not trying to end the year on a bad note. But then I'm also just trying to take better trades overall. Yes, same thing. We took out, if you look at this low right here that was set, we are nowhere near. Beautiful thing too here is this. This is another SMT. Look at that. Notice how we failed to take that sell side there. But if I go back to NASDAQ, we took that sell side, right? We came all the way down here. So what that could be saying, again, you don't want to take it by itself, right? You need other confirmations, like if we invert this gap, etc. But that's a good sign that the market needed to reach liquidity here, but didn't need to reach liquidity here. So that means the market could be gauging for uh, a good reversal, right? It's basically saying, hey, I didn't need to come down here because I didn't need the money was right here. Didn't need to come all the way down here, but Nasdaq did need to come down there and grab it. So again, this could be divergence. Again, what I'll be looking for this week is I need to see the market get through this gap, these gaps, start inverting stuff. Right there's another one. If we start doing that, then I'll start to be playing back into the overall bullish. I think I am bullish on this, but I need to see some stuff happen. This is a good start. It's a good sign, but you can't just say, okay, we're going long because of this. It's not enough. It's not enough. So let me look at the daily and then we'll talk about the trades that I took. I took two, or I'm sorry, there was a few trades setups. I only took one this past week. Uh, so what's going on here? Again, I like to look at last week's candle. What do we do? We ran liquidity by taking out that low, but still stayed inside this gap, I think. Try it like that. Yeah, so we've been respecting that. There's a lot of wicks to the downside. Lets me know we could be hunting for liquidity. We didn't fully break structure there. So ideally, I'd love for us to maybe even come down and take last week's low right there. Mm. With sell side and then go higher. Man, I'm sleepy. I don't know what's going on today, man. So ideally, that's what I want to see. We'll see what happens and see what plays out. Again, when it comes to these indices, I'm only really taking trade setups if it gives us a good, clean New York continuation. What do I mean by that? Same thing I mean on Forex and the currencies. This is a good example of one. So this was the market. This was the day that we took the I think I called this one out. I'm pretty sure I called this one out. Oh, wait a minute. Is this Thursday? I maybe took this one. I think I took this one. We'll call out both of them though, but I want you to get to use this. Again, the indicator that I'm using, it's called ICT everything. Um, but you can, where's it at? A bunch of indicators on here, and to be honest, most of them are useless. I've been trying out new things just to see if there's anything. Anything new that anybody had that helps me use stuff better, and it's honestly hasn't really been a ton. But did I delete it? I might have deleted it. Uh, Let me throw it back on here. It's called ICT Everything by Cole Brew Rosh. Um, Basically what it does is it pivots out and points out the Asian range on the charts. I don't know why it's not. Oh, I don't know why. Do that. There it goes. So now it shows every Asian session. So again, this is our Asian range, right? Um, I you can either use this indicator or you can have it on the charts just draw it out, but it's basically 7 p.m. to should be 8 p.m. to midnight is that Asian window. I'm gonna just change that to midnight. Should be okay. So now it should be what happened? Whatever. Anyway, it should be 8 p.m. to midnight. I'll play around with it. But again, I'm looking at this the same way that the markets that I look at, the New York session continuation uh on uh on the currencies. So if we think we're going to be bullish for the day, by the time I come to the terminal, the only thing different is the time. It's 9:30 instead of 7 o'clock, right? Because the market opens up at 9:30. We see the sell side here. We came down here, ran sell side. What happened at the rest of it, London? Well, we started trading above these old highs. So by the time I get to the terminal at 8:30, I'm just looking for anything. I've already seen that the market has taken out Asian sell side. So now I want to see us just give us a little pullback and continue on going higher for the day, right? So if we jump down to the 5 minute time frame, see a couple things here. I'm gonna back this up, back it up, do that. So first and foremost, this was our 9:30 window, 9:45. Saw a lot of wicks in this area. Again, how I look at this is we've already came down here, grabbed our sell side out of our Asian range. So should we want to come back down here? We did take out the high of the day at this point, we did. But our overall bias at this point was also high too. So I wanted to see the market keep running up. But when I see this, I'm like, okay, cool. I don't really want to see the market come back down here because we're bullish. We were bullish for this at that moment, right? For the week, last week. We also came down here and took sell side. So naturally want to see the market go higher. So ideally, again, want to see the market go higher at open or in that 30-minute window between 9:30 and 10 o'clock when we're looking for the opportunities to go long, get down to the 3 minute, 2 minute. Might just be the 1 minute. So again, when you're looking for trades on indices, it could be anything from the 5 minute to the 1 minute, as far as the good entries. Or you could just take the 15-minute time frame if it opens up there, right? Just again, looking for our setup in reverse. And what did we do? We ran liquidity, broke market structure, and ran upwards, and then traded back into this overall fair value gap. Boom. So ideally, that's what I'm looking for. Again, notice how the fair value gap here, the market, technically there's two. Technically, it's that one to that one, and then obviously that high to that low. But notice how the bodies all stayed within this, right? There's a whole lot of wicks, a whole lot of price action, but the market never really took out any of these lows. It did wick below it, but didn't close to give us that run. That's a good sign. Even though this is choppy, good sign. right after, our 1020 or 1010 macro or 950 macro ended at 1010 right here. And then we just went down one more time and then went up, right? So you could definitely see this as consolidation, right? It's chopping back and forth. Anytime you see the market chopping, it's getting ready to make a bigger move. It might happen that session, it might happen the next session, but same thing. So I didn't take that one. I actually took or maybe I did take that one. There's two that I outlined in the chat. Um, I gotta go back and see which one was the one I actually took. But YM, I have not taken a YM trade. YM is US 30. I have not traded US 30 in years, man. Like years. I don't really mess with US 30 too much. It just seems a little crazy, a little sporadic for me. So let me go back up to the 15 minute. The last one was this one right here. So coming into the terminal again, saw the market take out the high of Asia pre-market. Again, this was in London session. So we came up here, took out the buy side that was there. You could also say we took out the buy side above this wick, but for the most part, we took out the high of the day, Asian range, and then fell for the rest of the day. And then if you look at what happened at 9:30, so when you get to the terminal at 9:30, you're looking at this whole thing and you're like, okay, cool. We just took out the Asian high, right? We took out the Asian low. There's no reason for us to want to go back up here, right? Why? Because this money was rated, right? When we took out this high, the liquidity was rated. So there's no reason to go back up there. So a lot of times you're a good place to have your trade, your stop loss, if you can manage it, is the higher low of the day at that time. Because most likely if you're wrong, if you're right, you're probably going to go the other way. And it's in a good safe spot because the market does not like to run back to old highs. Anytime you have a bearish bias and the market comes back and takes out the high of the day or the high of Asia, you could be on the wrong side of the markets. But anyway, so again, very clean setup. We ran liquidity, took out these highs, broke structure, decided to go lower, opened up a fair value gap on the 5 minute, I believe. Let me see which one it was. It's on there somewhere. Either way, anyway, you can make the idea here that for the trade that the market wants to run lower. We get to the market at 9:30. It tries this gap one more time, and then it just kind of gives up the ghost and goes lower. Right. And I was sitting in this for I mean, at least 20 minutes or so because I got in somewhere around 9:50. Somewhere around here when the market decided to run lower, came back up, stopped. Didn't stop me out, but it was close because I didn't expect the market to want to come back up here. So we came back up here, took out not only traded back into that gap, but also just stopped just shy of taking out the high. Again, if I zoom in, stuff is algorithmic. You see how the wicks are pointing to the mid gap, but then doesn't trade through that. That's a great sign. So again, we run lower. And it obviously hits my target. This was the trade that I actually took. I remember this now. Yeah, so I ended up I was having a hard time getting my MetaTrader account open, and for some reason it was like glitching out on my phone. So I ended up taking this on a Tradeify account. I bought like a live funded one not too long ago. Again, because I thought I was gonna, for the rest of the year, maybe transition back to indices. And I was like, okay, if I'm gonna take indices, then I might as well do this on an indices funded account. So Tradeify was the one that I went with. They just have a live option there that you can use to do a live funded trading account. They have like a straight to funded opportunity there where you don't have to take a challenge, you just go live immediately. So I was like, all right, cool, let me try this. Um, so I did that, and then ended up hopping in with more contracts there with this BISI. And that was really it, man. That was pretty much the trade in a nutshell. With these accounts, again, Tradeify is interesting because they give you a live funded account off rip and they say, okay, you got to make like 9,000 on it. But the 9,000 has to be broken up over like 5 days. It can't be any, you can't have more than 20% on a good day, which kind of stipends you because I ended up getting out somewhere around here and I could have watched the rest of the trade play out. But obviously we're not trading with my real account. So if you're trading with your real account, it's always probably the best thing in the long run. But prop firms milk them so you can't anymore. But anyway, so again, trading into this gap there and then took it to somewhere in this range. Again, my original target was like down here. So that's the only trades that's the one trade I watched. The other one is the one that or this one's the one that I took. And that's pretty much everything. So I'm gonna pause. I know I've been talking for a second. You guys have any questions about those trades? Do you have any questions about how I'm using the power of three with the indices? Because same idea, but just little different. The implementation of it because the time is different, but it's the same rules apply, right? If I'm bearish and uh I come to the New York session at 9:30. I almost put it at 7:30. And I look at the terminal and I see us taking out the high and then taking out the low, right? And we're bearish already for like the weekly projection or the daily projection. Then, yeah, there's no way in the world I'm trying to like go along on this because there's no reason to. That we took out the money above the high of the day, but then we took out the money at the low of the day. There's no reason for the market to want to do that. So while this is whipsawing around, I still maintained a lot of conviction because I was like, there's probably no way we're gonna do all of this and then still go back up. And it probably happens sometimes, but there's no way that we're gonna take out the high of the day, take out the low of Asia in London, and then go lower. Or and then trade all the way back up here again. So I was like, we probably gotta go lower. So oops. So that's the only thing. Um, that was the only thing. So that's all I got for you guys. But again, if you have any questions, let's talk about it. This is gonna be like the second part of the call, which is the usual Sunday stuff. And again, just talk about any questions you guys have. If you want me to break things down a little bit more, if there's anything you're struggling with trading wise, we could talk about it. So
Yo, Blake. So, thank you for the opportunity.
yeah,
Uh, Not a struggle, but more challenging. It's been challenging. Like I am happy and tired because I'm
yeah,
having good trades, but mentally, it it's demanding of me more attention with all these crazy moves we have going up and down. Um, and I'm getting into good trades. Many of them are exiting soon, way too early,
yeah,
and that sometimes messes up with my mood, my neutrality. I like to be neutral,
yeah,
uh, and watching my psychology. I'm noticing that we get like in Nasdaq, there's one or two good entries during the day, but if I miss that one good entry, then the rest of the day is pure chop.
hmm,
We're getting this like this nice extended moves for like 15 minutes, 30 minutes, and then the rest of the day is crap. So
yeah,
I have caught some of those moves, and been doing a hell lot of waiting, and
yeah,
between the waiting and noticing that some of the entries are happening later in the day, so I'm spending more time in front of the computer.
yeah.
Again, I finish up all my accounts green, but yesterday I woke up, I was like, I want to keep sleeping. I need a break, you
Yeah.
know.
No, I
So
got you. So I think the best thing to do is I mean you got to treat this kind of like your parameters for your job, right? Or work, right? If you're thinking like corporate or just like a regular shift job, right? Like so for me, I'm not gonna take any trades. I mean, so when I trade NASDAQ, I was never really like a good afternoon trader. I was always kind of like a good morning session trader. And it's just easier for me with my time window. So I really put the hard stop on my account by like 11:30 noon. If I'm not in the trade by 11 o'clock, most likely it's probably not going to happen that day. And usually when I do take the trade, it's me getting baited into something dumb, right? Like towards the end of that day. Like usually the best trades that I take, and it's like it's almost like this on currencies too. But the best trades that I take are gonna be around that 950 macro, right? And usually I kind of notice that like if the 950 macro is clean, then it's gonna be a clean day. And if it's not, it's probably gonna be a choppy day. So I really put those parameters on my trading day. So if I get to that 11 o'clock and I'm like, it's just not there, you got it. Yeah, I mentally say to myself, it's okay if it happens in PM session. It's also okay if I miss it, right? Like there's going to be another trade tomorrow. There's going to be something else. And so like even with this, even with NASDAQ, there's more setups in NASDAQ usually than there will be in currencies. And that's just on a normal day to day. I know that the market's choppy now, but like usually there's going to be more setups on NASDAQ, more setups on ES. They're going to be faster, they're going to be bigger, right? They might even be choppier sometimes too. But I mean, the same rules apply where it's like if you catch, I mean, I'm trading 3 days out of the week, and if I catch one maybe 2 days, then I don't need to do anything else. And if I catch that day early in the week, then I'm probably going to be done for the week, right? So it's really about for me, like maintaining that sniper's mentality. If you ever watch, I don't talk about this all the time, but if you ever watch those snipers on like just documentaries on snipers, they always talk about how these guys get in the trees, they sit there, they wait for that one shot, and then as soon as they discharge their weapon, they're done, and they're not trying to go back in and take multiple shots unless, that there's a really good opportunity there. But then once they're done and they're putting their weapon down, they mentally disconnect and they start going through their debrief process about like what did I do for the next time, whoop de whoop to whoop, right? But they disconnect from that shot. The same way we kind of need to disconnect from the trade or disconnect from the charts. Because this is kind of what I dropped this in the chart in the chat the other like this past week, and I was like, I just can't swing trade. I think I had that moment where I dropped it in the chat, and it was basically me saying that like when I'm in these swing trades, I'm thinking about the charts way too much. Like I'm thinking about trading. I'm checking my phone at like 7, 8 o'clock at night, right? And like I know I'm still in these trades and it's burning me out mentally. And it's just not the way that I'm supposed to. So if you feel yourself getting burnt out by these trades or by the market in general, that's just your sign to be like, okay, let me chill for the day or let me chill for the week, right? Because the worst, like we all know this, man. It takes one day, one bad session to mess up your entire months, or year, right? Like I was watching Tori trades. She's a trader on Instagram and she trades totally differently, but she in one trade lost $200,000. And yeah, exactly. And she basically was like, that was my entire profit for the year. I think she had a $200,000 account, took it to 400 and then lost 200 in a day. And so it was like, that was my entire year of trading going in a day. So that's what we want to avoid. So if you feel yourself, you got to listen to your body, listen to your head. And if you're like, I'm burnt out, it's okay. Because there's going to be another trade. And it only really takes, I mean, once your accounts are built up to the level that you want to get them built up to, it really only takes one good trade a week or a month or a few trades a month to really hit the numbers that you want to hit. So I would say you're doing a good job, like first and foremost, listening to your body and listening to your head. And then also note that like we're going into the end of the year, right? This is, I mean, traditionally, and you guys know because you've been with me for a while, but like the end of November is usually when I'm done for the year, right? So like usually I kind of, as we get in December, I kind of slow down a little bit. If there's a really, really good setup, I'll take it. But the markets are going to start chopping because just like our daily and weekly power of three, we got a yearly power of three that we're sticking to, right? So, right, just the same. That's what I always draw for power of three. If we're thinking about the year, we're here. We're like here. So the way the markets are chopping like this is the high for the year. Most likely, I mean, we got some time left in the year, right? But this might be the high for the year. And we might just be chopping in and around this range for the next, oops, let me go up time frame. Yeah, like this could be very well be the high for the year. And we could just be in this range for the next month, just taking out this high, taking out this low, taking out that. And so there's not really a good there might and I could be wrong. Tomorrow we could shoot up and it could take out the high tomorrow. But like Just it's okay if you're missing trades. It's okay if you're burnt out because it's the end of the year. Everybody's supposed to be burnt out. But just if you feel that, listen to that and then don't. If you are taking positions, take the risk down by like half or more, or just, find something else to do that day and kind of distract yourself with something else. And that's kind of usually what I do. So it's a long-winded answer, but hopefully it kind of like gets you know me by now. So, let me see, Tony, you got anything? So appreciate you, coach. But I've seen both of you guys have been passing accounts lately, though. Do you feel like you're getting, I know Hugo, the one that you had was like I haven't seen that firm before, but do you feel like you're at a point where have you gotten payouts from these firms yet? Or are you kind of in this like cycle? Because I know this was happening to me for a while where I was in this cycle of like passing accounts, but it was hard for me to get a payout on them. So like, are you kind of at that stage, or you feel like, are you guys been able to get payouts and stuff yet? Because it's kind of the next window.
Yeah, no, I passed them recently. I haven't got into the cycle of getting payouts. The Bullenox that I passed too, they're more restrictive with the payout rules. I have to wait 10 days,
Yeah,
and they have some crazy consistency rules. That
yeah,
I bought them because I wanted to learn practice on futures. Okay,
yeah.
I've done CFD of Nasdaq, but not futures. These were futures,
Okay.
and I bought three. I passed two. I burned one.
Yeah,
One of the crazy news. I think that was Friday, October 10. That candle down killed me. Um,
yeah.
and But I think I'm gonna withdraw money first from the take profit trader one that I passed. I just signed the agreement,
Okay.
and that I can withdraw daily.
Yeah, yeah. Okay. Yeah, I'm gonna check. Keep me up to date with that one. I know, like I said, I'm right now. I got the FTMO ones. I'm gonna go back to FTMO. Most likely, like when I feel good about trading currencies again, I'm probably gonna be back there. Um, but yeah, right now I'm just again with Nasdaq. The one I did, I'll show you guys. Uh, because this was the trade that we could talk about it because I know I didn't do my little count update anyway. Um, Second. Uh, I went to Tradeify for this one because I was like, I've been seeing the live defunded ones. I think I took one a long time ago and I know I didn't pass it. I blew it. This is months ago. Or it wasn't, I guess there was nothing to pass, but it was a live defunded. And I just wasn't in a good mental state then. So I ended up not getting to a payout on it, but show you guys where we're at now. Um, so this is it right here. Can you see oh, you can't see my screen. So this is the dashboard here. But basically, like you have to get to it's like this is a 150 account. And so you just need to get to 9,000, right? And then so there's like, with the future stuff, it's drawing trail down or that trailing drawdown on that. So once you hit 6,000, I think that locks in and so there's no more drawdown. And then 9,000 is your first payout. And then I think you do it again, but then you get to like 5 or 4,000, right? Instead of 9,000. And the third time it just gets smaller and smaller until I think you hit like the fourth payout and there's no cap. But your rule's kind of the same way where it's like 20%. You're kind of bound by the 20% drawdown rule. Or I'm sorry, 20% drawdown, 20% like max trade. So like if you're taking a payout, each individual day has to be like 20% at max of your overall withdrawal. So I think I could have made like 4 grand in the trade that I took on that YM trade, the YM short. Um, but I needed to limit myself, otherwise I was gonna have to make like 20,000 instead of 9,000, right? And so keep you up to date with this one. But I'm kind of excited about this one because again, you skip the uh the phase where you're going through the challenge. So if this one, if I get to this payout, then I'll probably take this other 3 grand, probably max out with them, um, and then just do the same thing over again, and then probably run back to FTMO and finish knocking out that one there too. So just really whatever the markets are going to provide before the end of the year. But really just trying to get back into the swing of the funded stuff, the swing of the FTMO fundings and the future stuff, and really just kind of max that out. So we'll see. We'll see what happens. But yeah, I mean, like, use these prop firms as much as possible. Use them, but then also, remember that they're not the end all be all, right? Like, remember that they're just a tool to get your personal accounts funded, or, if you want to take the money and do what you want with it, whatever. But for me, they're just kind of like a way to get back to having a crazy big personal account. And that's kind of my goal there. So 2026, there's going to be a lot of fun stuff happening. So, um, but yeah, let me see, Tony. I know you're still on. Do you have any questions? Joel, I know you hopped on. What's going on, man?
What's up, Blake?
Yeah. Hey, so I saw your text, man. These sessions this week, I can't really do anything this week because I'm just like crazy busy. But I mean, I would say like if you want to hop on these, I'm gonna probably try and do these at least for the rest of the year. This is gonna be like the only call, and so it's just gonna be the breakdown call plus the questions call, the office hours call that I always talk about. So hopefully making this a little bit more compact for everybody. I'm taking this and I'm uploading this to YouTube. So it's gonna be visibly available. It's not gonna be on WAP, but it's easy for everybody to watch and view. Um, if everybody's cool with that, you know what I mean? Like if you don't want to have you uploaded to, your voice or the questions that you have uploaded to YouTube, let me know and I won't have you up there. But basically I'm just gonna take this whole thing and just put it up there. So when you come on, just don't say or do anything crazy. Don't be handing out your government social or anything like that. Um, but okay. I guess if anybody has any questions, we could talk about them, or if there's anything else that you guys are struggling with. But I'm really proud of you guys. Hugo, Tony, man, y'all have been killing it lately with the challenges. Uh, you know, it's just been cool to see you guys, pass those and really just, get some more testimonials up in there. So I've taken a break from pushing like the actual course for a while. I have a lot of other like just my daily 9 to 5 is kind of going crazy right now, so I haven't been able to like really record or make content and really kind of share this out. So it's good for y'all because that means I can really focus in on y'all and help you guys as much as possible with stuff. But hopefully sometime early next year, I'm gonna be back working to really push this out and kind of grow the mentorship, out. But until then, I'm just, I'm making money trading on my own, so I'm not really too worried about trying to bring new people in. So yeah. So we'll touch next week. And then yeah, go from there. But if y'all have any questions, just hit me in the chat. Same thing you usually do, and I'll try to again keep outlining everything as we get into the end of the year. My personal schedule is probably gonna free up, I'd say like in a week or two. So you're gonna see me more on the charts, more on the content, towards the end of the year, just probably making a lot more stuff. I was telling Hugo and Tony beforehand, I'm gonna probably cut recording right here too.